Good evening and welcome to the Australian Stock Market Show. The All Ordinaries Index increased by just under 1% last week, which saw the market create consecutively new weekly highs for the first time since May of this year. This upward trend suggests the market may finally be ready to break out of the current sideways move. Stay tuned as we'll discuss our thoughts on that shortly. We'll also take a look at the sectors on the Australian market, and for our main topic in tonight's show, we get into the top 10 trader stocks watch list. Should you buy, hold or sell? First up, we'll share our hot stock tip for the week, so sit back and relax. Again, tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some of the important questions around the market. Tonight we're excited to share our thoughts on some great stocks like Life360, Illumina, Bellevue Gold, the sectors in the Australian stock market and more, so get comfortable as we'll get into those soon. I'm Dale Gillam and I'm your host for tonight, and joining me are two highly experienced professional traders from Wealth Within, Janine Cox and Philip Tortevsky. And together we're Australia's most trusted stock market educators. Good evening team, how are you guys?
Fantastic, and yourself?
Super fantastic, and I'll get better later. So, how are you, Phil?
Great. Yeah, ready for another week. Good show, Mark.
You've got some really good stuff happening later on in the show, so stay tuned for that. But anyway, tonight, as mentioned, we do get into the sectors in the Australian stock market. But first, let's take a look at this week's hot stock tip. Phil, I know you've got a ripper for us tonight. What is it?
I sure do. All right, the hot stock tip for tonight is CSL Limited, stock code CSL. So let's get straight into it. On your screen now is the marketindex.com. And you'll see a snapshot of CSL. It is a global biotechnology company engaged in research, development, distribution of biopharmaceutical products and vaccines. Now, it's got a performance 2024 year to date of positive 4%, a 1 year return of positive 13 versus the sector on a 1 year basis is doing positive 1.7. So doing really, really well against the sector, and also performing really, really well against the ASX 200 on a 1 year basis. So this stock, obviously one of the biggest players on our market with a market cap of 144 billion and ranked number 3. So, you know, this is a stock for your long-term, short-term, buy and hold, trader, you name it. Everyone can get a piece of this action.
It's the stock that hides most mistakes.
Yeah, it does. And I mean, and what a stock it is. I mean, if we go to the chart and have a quick look, you'll see the stock is, you know, as we say, a stock that has performed, you know, really since inception. You can see this monthly chart. It's just gone from strength to strength. But what has happened, as you can see, since 2020, the stock has had a bit of a, I guess, consolidation, sideways, downy type period, if you will. And what I found really interesting with CSL, because, you know, at some point, we've spoken about this so much on the show, at some point, this stock will break out of this sideways congestion. And if it breaks on the upside, then that means really, really promising things for this stock. You know, potentially a resumption of this really strong trend that it does like to do. But if we can go back in time, you can see that there are two previous occasions for CSL where the stock has had, you know, downward periods. Really, there's only ever been 3. And if we zoom into these previous two, one was around 2001 where the stock fell about 77 odd %. And it took about 16 months for that to eventuate. Then we had another fall back in 2008, which was the GFC, obviously. The stock fell around 38.99%, and it took about 40 months for that move to be over, I guess, before the stock resumed on up and continued through. And what's interesting is it did break through this momentum line to give us that confirmation. And obviously what happened was absolutely magic. With since 2012, it's gone on and really extended itself out. But what I find really interesting as we zoom into what's happening today with this stock, it's currently fallen around 33 odd %. So it's fallen the most of those two different periods, the least of the 3 periods, 2 periods in the past. But it's gone on for the longest. It's gone on for 53 months. So there's been a lot of effort or a lot of time for the price to fall, but it's fallen not much. So to me, that's one clue that maybe this stock, you know, has really tried, the sellers have tried to push it down with not much result compared to what's happened in the past. And just zooming in even a little further into this sideways period, because the question now is, when are we going to know that, it's going to break out? What sign, what signals is it going to give us that it is likely to break out? So if we just go back to the chart and have a look, if we just measure, some of the recent ranges here, we've got eight months from this particular low in March 2021 until it hit this momentum line, or a level of resistance, if you will. Then again, the stock it fell back down to a low in February 22, attempted to take this momentum line again, and that took 12 months and the stock fell away. In more recent price action, it tried again in October 2023 and hit this momentum line on the upside, but look how quick it did it. It did it in 4 months, so half of the 8 months and a third of what it took in the previous attempt. So this is the first time this stock has attempted this price level and done it so quickly. So to me, I'm thinking I guess the character is changing a little bit, albeit in the short term. We are seeing these bars extend, resembling a bit more of this price action that was when the stock was trending. So right now, for me, if this stock can get above this momentum line, hold and close, then I think this is really one to start watching very closely.
I think you're right. It's definitely on my watch list to put into my super fund. So I don't care whether it's $298, but the future looks bright for CSL. But that is it for our weekly hot stock tip. Now, shortly we're going to get into our topic for tonight. But before we do, right now is your opportunity to get involved in the show and have your questions answered. So call us now on 03 for Melbourne 9290 9988, or you can text your question to the number on your screen. Now, the first caller into the show right now gets a free copy of my book, Accelerate Your Wealth. So pick up your phone and dial 9290 9988. Now, while we do that, or while you do that, tonight we'll give you our thoughts on the sectors in the Australian market. So let's get into it.
On your screen right now is a watch list of the Australian sectors. And look, it's not all bad news, it's mostly good news, which is great. So information technology up 27.75%. Obviously the tech stocks are still, hanging in there. And will they be at the top of the board at the end of the year? That's what I'm really excited to know. Financials are right up there, 14.5% on the financial side. So clearly an area that would be good to have in your portfolio if you haven't got it already. It's another area to keep on the list. Utilities, 12% up for the year, so some really good activity there. We've seen a break up to the all-time high, so that's really interesting to watch. Consumer discretionary is another one, about 10% up for the year. So this is the big one, because in a boom, the consumer discretionary often take off, but we looked at that and thought, well, okay, are they going to perform as well as things like growth? We talked about it last week. Growth areas like energy and materials, while these are the laggards right now, they tend to do best in the booms. And the fact that we've actually got negative numbers down here, to me, is really exciting, because it means that whatever run we're going to see, it hasn't happened yet. And so people who are thinking, oh, look, have I missed out because I didn't get some of the tech stocks? No, you haven't missed out at all, because there's plenty of opportunity in here, we think.
Well, we showed last week that energy and materials, particularly energy, was the best performer before the GFC. That run up from 2003 to 2007. Materials was very, very close second. So, you're right 100%. There is so much opportunity once they get going. And energy and materials both had really, really good weeks last week, bouncing off real significant support. So I'm not saying now's the time, but
don't forget about healthkeare too. CSL's looking good, but when that's taking off, the rest of that sector will start taking off too, I think.
Yeah, I agree.
So are we looking at a chart at all?
Look, I thought we'd have a look at financials. So we've got the chart of the financials up there for you. You can see there we've gone to these really nice highs. So a breakout happened. We saw Westpac, NAB, Commonwealth Bank took off. Macquarie's looking good. So the financials are really, in my opinion, a place to be. If you're not in them already, you haven't missed out. As I said, there's more upside, I think, where that's due to come. So, but we've broken out of this high. That was all important. We know that when stocks or markets break to new highs, we can see that they do tend to test these levels. I'm just going to expand the chart back up. We've seen a little bit of a test back through here. This was in April, we saw it, and it's taken off again, so we've seen a move up. Look, we can always see another retest of that again. It could be that the market pulls back into that space, but at the moment, this is really looking good for the financial sector.
No, I like it. I think the market really is setting up, and Phil and Arnie talked about it yesterday on our market report for on talkingwealth.com. It's we're excited about what the next few months are going to happen right through till the next little low, sort of September, October. But I think the second half of this year is going to be a rip snorter anyway. But that is it for our thoughts on the Australian sectors. Now remember, to get your questions answered live on air, you will need to text or call into the show. Now let's get into our first question. Now James is asking, I'm keen to get your thoughts on Magellan Financial Group. It looks to have found support around 10% of the all-time high after having fallen 90% since 2020. I'm not currently in the stock, but potentially looking to purchase if the price closes the month above $10.41. Medium to long term. So I'll go to you, Phil. Magellan Financial.
It's an interesting stock. Good choice, James. And let's go to the chart to have a look for you. But I mean, look, it's a stock that's really capitulated since January 2020, and maybe now it is starting to show those first signs of some kind of support. Albeit, I would like to see the stock get going a little bit more. And I really like your idea about looking for to get involved above 10.41, because that kind of clears a lot of this price action around here. I wouldn't even argue about trying to get involved once it breaks through these August highs, because that's really going to, give you through to new clean price action to give you even more confirmation, given the stock has obviously been falling for so long. But look, I mean, if it is a significant low, don't be surprised if the stock does play around in terms of price, spike up, spike down, and give you that erratic price action. That is possible. But the way it is forming right now, you're getting a bit of a congestion in price. The bars are, tightening up and consolidating here. So look, I think there is an explosive move coming. If it's on the upside, then you're going to get a move up. Just be cautious, because you are trading from 90% lows. So have your rules and strategy in place to monitor that.
But I think he's covered a lot of that in part of his buy rule. He's saying, I want it to close on a month above that level, not just trade through that like some people do. So he's looking at his filter about, well, what is a solid signal, because of that little bit more extra risk that you're talking about. So I love what he's talking about. So James, you've got a big thumbs up. Do you want to say
Well, I
anything
like
before?
it because it's not being greedy. I mean, this is a stock that's got so much upside potential here. If you're just looking at, we're not even getting any, this is 65% to one of the next levels up here without even really trying. So I just think looking at it, it looks interesting for the medium to long term even.
It's exactly what he's looking for anyway. Well done, James. Now we do have a caller on the line. Welcome to the Australian Stock Market Show. Who have I got on the line?
It's Matt. How you going, guys?
Good evening, Matt, and welcome to the show. What's your question for us?
Stock is DDR, Dicker Data.
Yep.
I've actually been watching it for a while because I made a good trade on it before it hit its last little run up. Looks like it's broken a trend line, and there's another little buy entry there. My question is, I've kind of missed the little swing entry there, but it's probably I've missed it by 5%. Should I wait for a pullback, or should I still get in?
Very good question. Short, medium, long-term trade? What are you looking for?
Medium term.
Medium term.
It runs quite well, and I can get out on trend lines.
Yeah, really, really good stock. Well, Phil's got it up, so the guys will have a look at that for you now. But thanks for calling in, Matt. What do you reckon, Phil?
Interesting, very interesting.
He's talking about his entry. It's gone about 5% above his entry. Should he still get into it now, or what should he be doing for that medium-term trade?
I think if you're talking mediums, because really it's a question of risk reward now. It's gone a bit above where he would like to get in, and so is there still enough reward versus the risk that you're taking getting in at these levels? So that's the question that you need to answer. In terms of price analysis here, I think if we bring up the monthly chart, because he did say more medium to long term, right?
Yeah, he said medium term.
So I see this stock, if this is a real low, and it looks to be the case, because it is giving a little bit of confirmation. We are on the monthly chart here. It's a really strong month so far. So if that were to be the case, then I think the next level of resistance would be somewhere around these highs. And if that is the case, you're looking at,
that's 30%, isn't it?
Almost 23% potential to those levels. So I think there's plenty of opportunity at that current price. Waiting for it to pull back is the...
Sometimes fraught with danger, isn't it? Because they just keep going on you.
Exactly. So you need to weigh that up if you really want to get into the stock, and you've had some good rules around it, and you're confident about the way you're going to trade on this stock. Then, I mean, look.
Well,
I think.
as I often say to students, when they're asking about stocks, is it triggered to buy? And they go, yeah. And I go, if it's a buy, it's a buy, it's a buy.
There you
So
go.
I know you've got some thoughts on this.
Yeah, look, I mean, it depends on how far it is away from the buy price. So it's a really good
We're saying
question
about
that he's
5%.
asking.
And on a medium-term trade, that's not
5%'s
much.
not much, no.
Not much at
I
all.
wouldn't be concerned. I mean, if this stock's got, like what Phil's saying, more than 20% upside or around that level, then it's got more than what we look for initially. So I think it looks nice. Well, the only thing I would say is for someone who's a little bit more conservative, it's probably not enough of a move up yet for me.
So for you, you're thinking it's probably maybe be too early to buy it in the first place. Okay, well, if you want to elaborate on that, or you want to keep us all in the dark.
Look, it depends how long you've got.
Not that long, if you have to ask. Not that long.
Look, I guess if just looking at the monthly chart, because I'd love to dissect this a little bit further. It's not one that I look at a lot, but I can just see, just looking at it, that there's a bit of resistance around this level. So this is where it actually stopped in May when it failed to break up and it pulled back. I'd like to see that, but then he's got to be mindful of what Phil mentioned, that then the upside potential is reduced. But if it got through that, I'd be then looking for it to take out that high there and be more confident that it would.
There you go. There you've got it from Janine there. So thanks for calling in, Matt. Now we have a text from Dion who is asking, YAL has been trading sideways but settled in a nice uptrend over the last 12 months. Just broke the high of September 2022. Thinking I'll wait for a pullback to test $7 prior to entry for short to medium term. Or is it too late? Thoughts, Dion? Janine Yankol.
It's all about the stop loss, Dion. So, in terms of whether you get in now or not, I know that can be really a challenge for everybody who's out there looking at some of these stocks that can be more volatile and they just take off. There's nothing more frustrating than you can do all the analysis in the world and all of a sudden you can't stop it. It just takes off and maybe you didn't get in time. Well, that's just trading, isn't it?
Yep,
so then what it is, it's about making that decision. If you get in now, what are the issues? What's the risk? If you wait, what are you going to wait for? Just be really absolutely clear about that either way. That's all I can say.
Well, yeah, I mean, sometimes it's a bit, can I say penny pinching? It's like it's gapped up or jumped up, so, I'll hang out and wait for it to come back again. But as we said a second ago, sometimes they just keep going, don't they, Phil?
I mean, you can also, add another spin to this. If it is a stock that you're looking at, obviously this one's ran away quite a bit. And I don't know the exact entry rules, but it has had a really strong month. Now, I mean, what you could do is, given it's run quite hard according to what you're looking at, maybe put a longer term mindset on it and say, okay, well, I'm going to use this as more of a long-term trade, increase the time frame of the trade, leave it for more long-term. If it comes back and gives you the pullback, then hey, guess what? You get a second entry and you take your second entry with more of your short-term or medium-term approach that you were going to do in the first place. So in both instances, you're in on the trade, one more of a long-term view, and you get the best of both worlds.
Well,
as long as it doesn't become a long-term buy and hold for the wrong reasons. Yeah.
Hey, look, I mean, the immortal words of the great trader, next. Pick another stock too, that's the other way. Anyway, Praveen is looking for our thoughts on copper stock, or on a copper stock, and writes, would love to hear your respective views on the expected trajectory of the share price of Arius Resources based on technical analysis and market fundamentals. Please share your views on potential reversal and recovery of prices and the expected timing. Praveen, do you want to go for that one, Phil?
Yes, we can. Praveen, interesting stock choice. Let's go to the chart so we can explain why. Now, this is one of those stocks that we've shown on the show time and time again. When these stocks are trading around 20 odd cents under the famous Janine dollar, we can see that they can spend a lot of time doing absolutely nothing, and that is what is the case with this stock. Since 2014, really, it's just been floating around this low near the all-time low. The question is whether there is potential upside. I want to go to the weekly chart and just say, well, even if there is, you've got to really ask yourself for how long, because you're not going to get real, significant confirmation at these price levels. You're going to get a lot of erratic price action. As the stock starts to move through maybe $1, maybe even 80 cents through here, you might start to get to see, real confirmation and consolidation that it does want to go higher and actually be in a long-term uptrend. But I mean, where you are now, if we just go back to the chart, you could have thought that back in October here that it was maybe finding a low. It's tested here with a higher base, you're thinking to get in, and it's just capitulated. And that's happened all the way throughout this stock at these particular levels. So although it is showing a first signal of a potentially higher base, I think you're very early in this stock at these levels, and you're playing a risky game. So up to you.
Well, copper. What are we thinking on copper at the moment, Janine?
Bullish on that.
So he's in the right sector, looking at it, but is he doing the right rules? Now he's asked us to give us buy and sell rules and techniques and fundamentals. Now, Praveen, we're technical analysts. We're never going to get into all the fundamentals, etc., on a stock, especially not on this sort of show. But we're also not going to give you buy and sell rules and the indicators and everything else. That's up for you to understand what your trading plan and the strategy is. But you are in the right sector, isn't it? And I think and so maybe you're not looking at the right stock in that sector. That's what Phil's sort of explaining there anyway. But now Tony's asking about directors' interest in a great email that he sent us. Now he says, "Dear Dynamic Team, could you please offer some insights into the relevance of directors' change of interest with respect to performance rights?" Now, JLG has prompted my curiosity. 3 directors had a change of interest on the 1st of July each, converting a 44%, 55% and 57% of their performance rights to shares. I'm wondering if this might have little merit to confluence on trading decisions other than possible short-term news reaction. Tony. Now I'm going to go to you for this one, Janine.
Yeah, look, I generally don't pay any attention to whether directors are buying or selling their shares. Look, when I first started in the stock market, that was one of the things that I did pay attention to, because the stuff that I was reading was telling me to. But in the end, you realise that that's not what you want to be looking at, and it's the chart that you really need to be focused on, and forgetting all about the noise that's going on out there, because directors are always going to be buying, selling and getting rights and doing different things.
Well, Tony did. We have to edit a lot of these emails because some of them are just like War and Peace that we have to edit down, and Tony's we had to probably chop it in about 60% off it because he had a whole lot of reasons why they may or may not be selling their shares. But the reason is irrelevant to us, isn't it, really? It's the chart that tells us what's going on. What are you saying, Phil?
Yeah, no, I'm with you guys. I don't look at it at all, and the chart's going to tell you everything. The price action, regardless of why a director may be selling or not selling it, to me, it's not important.
It's just normal. It's just normal day-to-day practice. But a great question, Tony, and it shows you thinking about things, but maybe a little bit overthinking. So maybe pull it back just a little bit anyway. But great question anyway. Well, Tony, hope that answers your question. Now to something just a little bit different. Have you ever felt that stocks you are trading are moving too slowly for you? Or maybe you find the daily fluctuations in price is affecting your sleep on certain stocks. Well, you're not alone. One of the biggest challenges both new and experienced have is that they trade the wrong stocks relative to their goal. So for tonight's topic, we discussed the difference between trading stocks and investing stocks, how to identify them, and how you can select the right stock for the right goal. Now I'm going to throw to you, Janine, to clarify the difference between a trader and investor.
Good question. Now, sometimes traders think they're investors and investors think they're traders, and it can all get a bit confusing, which is why we've got some really simple, ideas for you to have a look at as to how to differentiate. So the first thing here is there's a goal. Obviously, the trader has a goal and the investor has a goal, and they're quite different. Traders want to profit from the market trends. They're often more active type investors, whereas investors generally are looking for wealth accumulation, and they're thinking about retirement or income. So that's the focus. But the whole strategy side of thing is another area. So this is another thing that differentiates the two. Focusing on patterns is the job of the trader. They're very much focused on what's going on in the charts and the market trends, and understanding the market on a week-to-week, day-to-day, week-to-week, and even the long term. You'll see us talking about monthly charts a lot, and that's what we do, looking at the big picture. You don't have to be an investor to be looking long term. Traders can often be doing that as well, whereas long term investors typically could be more buy and hold. They rely on fundamental analysis, are focused on long term, and the time horizons are often different as well. So, short to medium term is typically the time frame for traders, and I don't have to tell you that, Phil, more short term, but someone who's more of a trader who's looking more longer term can still trade over on monthly charts and be trading with a bigger picture view, whereas an investor might just be the ostrich, I guess, and put their head in the
Well,
sand.
sometimes investors don't do anything. So to me, it's the activity is not there, so passive. But sometimes we get active investors, but then sometimes traders are very, very active and sometimes they're only mildly active. So it just depends. There's varying degrees of both, but we'll probably get into that a little bit more later. But we see this we'll see this all the time with traders and trading investing stocks and investors trading traders stocks. So I want to now ask you, Phil, what issues arise if you're not choosing the right stocks for the right scenario?
A lot. I mean, as a trader, the first thing you need or you don't have is time, because you're trading, let's say you're trading for a living and you need that income. So if you're trading a slow moving stock, you know, the time is the thing that's going to kill you. Telstra, basically. And fees for holding. You know, you want to hold the stock as least as possible and get that growth as quick as possible. Now, on the flip side, if you're an investor and you're trading a trading stock, well, you're going to get whipsawed in and out of that stock, which is counter to what you want to do. You want to sit in that stock and be more buy and hold, you know, not as active. So the wrong stock can really destroy the strategy you're looking for.
When you're going to ride the roller coaster of, you know, your heart monitor and everything going, you know, all over the
All
place
that
if
too.
you're investor trading a volatile stock. And so your portfolio could be up or down on any one day, and that can be stressful for investors as well. So, but anyway, I totally agree with what you're talking about, Phil and Janine. Now, it's important so much so that it can be the difference in achieving your desired goals. Now, another thing a lot ignore is the tax implications of what they are doing. Are you a trader or an investor? The answer, or your answer, will determine the tax outcome, won't it, Janine?
Yes, and look, investors tend to hold more medium long term, and so you're more likely to have investors over many years or maybe at least 12 months, and so therefore CGT rules will apply. So that's 50% off if you've held the stock for more than 12 months. That's 50%. Your capital gain is reduced by 50%, so you're only paying tax on half of the gain.
Traders don't often get that, do they? Really,
that's right.
depending. I mean, Phil wouldn't get that at all because, you know,
No,
your short-term trading.
That's not.
I get it.
12 months.
I get it on my super fund. So anyway, but spot on, Janine. Anyway, so let's now have a quick look at what the ATO has on their website in terms of how to distinguish between a trader and an investor. Now you can see from the image there are some key points. The nature of your activities, meaning what's the purpose of what you're doing, the frequency of your trading. The more trades you place, the more likely you are to be considered carrying on the business of trading. And are you organised in a business-like way? Do you have a business plan, trading plans and so forth? If you think you fit that criteria, then more than likely you sit in the trader camp. Now, regardless of your thoughts, I suggest you see your accountant to confirm it. Now, before the team gets into their best trading stocks, I want to get their thoughts on what they look for when identifying a good trading stock. I'm going to throw to you, Phil, for this one.
Yeah, high momentum, liquidity, high volatility. That can come from things like news-driven events as well. That can also give you that extra increased momentum and volatility. But they're the main two: good liquidity, good momentum, good volatility, and
so you're talking about something that's easily traded, making sure you got the direction so that you get that right.
And it moves more than normal.
And it moves more than normal. So like, what?
So like we're going to show some nice volatility. Yes, some things that we measure our volatility with.
Secret.
Keeping it up his sleeve, everybody. So watch out for Phil. Anyway, well, let's switch now and get Janine's criteria for a good investor stock.
Yeah, investors want more of blue chip stocks. You know, give me those nice stocks with, you know, they do trend well, but they tend to pay really juicy dividends.
We've seen some investors of specky stocks.
But you can also have good growth stocks as well that can be really good for investors. They're more likely to give you a bit more capital growth to boost the portfolio, but they pay reasonable dividends as well.
Okay.
All about the fundamentals usually, but you know, the smart investors will still want to know the technical side of it, because without both, you're only seeing half the picture.
That's great. Anyway, now I know the guys are itching to show you their best stocks for trading. So Phil, how about we get into them now?
All right. So on your screen now is a watch list. Now I've put together this watch list just so you can have a look and more importantly, now this isn't the only way to measure volatility and momentum. This is just one way. You can look at the price of the price chart of a stock and measure it yourself. Yep. There are many ways you can do it, but what we've got on here is a watch list and of the top 200. And I've included an ATR, which is a measure of volatility. This HV represents a historical volatility measure. Now, for those of you that aren't seeing this, you can go out there and research what these things are. This particular measure is a beta measure, which measures the volatility versus the XJO as an average.
So if the XJO is doing like 1 point per day.
Yep, this is anything greater than that, and it's typically, if it's higher than 1 on the reading, that means it's doing much more than the average.
Faster.
And a momentum, I guess, indicator type measure to give you an idea on the momentum. But what's cool about this watch list that we've got is it's actually got averages. So these are the averages of the top 200 stocks as they're going, and this consistently updates itself. So, you'll often find new stocks that are moving more volatile for whatever reason, stocks that are settling down.
So you can look at the average and say, well, okay, if I'm a trader and I want something more volatile, I can pick something above that. So here we've got an average of 13,
Yes.
You pick something 15, 20 or maybe more.
Yeah, that's the point. The point is to find out what's moving right now, because as a trader, it's important to know what's moving right now, because that's, as I said, you want to be in markets that are moving, so you can, if you're trading for income, you know that by the end of the month, week, fortnight, there is going to be growth in that trade that you've got enough to give you the money that you need. So if we just go back to the watch
So is
list.
this like last week where you get 3 green boxes and that's it?
It's exactly like last week, and
Okay.
I just flipped it around. Last week was fundamentals, but these green highlighted boxes, as Dale's mentioned, are just stocks that are above the averages. And what I look for is, if you can find, as we scroll through down, some that are really winning, or I guess covering off on all metrics, higher historical volatility, higher beta to the index, higher momentum, and higher of the average true range. And you'd be surprised they're out there. And, this is a really, really quick way to go through the top 200 and have a look and identify those stocks that are moving right now, that are giving you that huge momentum and volatility relative to the rest of the stocks on the market, so you can find those opportunities. So I won't scroll through the whole list because
There's 200.
there's 200 there, but we've picked a few that have come out of there, and if we start off with Life 360, and this is the beautiful thing of the watch list, it's picked up Life 360, and one look at the chart, you can see this is moving. So
Well, it has for a long time.
as a trader, you're licking your lips here thinking, hey, this is the opportunities that I'm looking for, because most of the time as a trader, you're looking more short to medium term. And I mean, even if we just stick to the weekly chart here, you can have a look at this stock. Obviously, it's had a huge run, come through December 2021, had this really, really big week in March 2024, but continuously giving you growth that is very, and we're talking about weekly charts here. We're not even zooming in less, but you got 40% to that move. You got another move here of about 35%, and we're talking in less than a couple of months.
Now, Phil, we've just had some people write in about things or contact us and ask, have I missed the boat? Is it too late? So what would you say about this one, given it's had that big rise already?
Well, this is a good question, because we showed back last week about stocks that looked exactly like this just before the GFC, and people were writing these stocks off saying, oh no, they've run too hard. But history has shown us that these stocks went for huge runs, and that's a point in itself. A lot of people look at charts and they have that assumption on stocks that, hey, it's too expensive. But what are you basing that on?
What are you basing it on?
Because what the truth of the matter is that the stock's being bought. It's wanting to go higher.
Well, remember, like when I first started looking at the stock market, people would tell us, oh, you have to buy stocks that are at their 52-week lows. And I'm thinking, what the? I just had to look at this and do my own research on that. But when in this sort of market, when the market takes off, those people are not going to be able to find anything.
No, they're not going to be able to. Yeah, I mean, this stock's just listing, I'm not sure where that has yet, but on the US stock market as well.
Yeah.
I'm not sure which one. I think it's the NASDAQ, but I'm not sure. But that should give us more liquidity.
Should,
But I mean, even as a trader, like we mentioned, your time frame is different to a long-term investor. So why not ride that run? It's so important. But look, let's go to the next one. And there is a bit of a theme, obviously not with Illumina, but you'll see a theme with these stocks that will come through, and we'll pick up on it later. But I mean, Janine, did you want to touch on Illumina? Because look at the volatility.
Yeah.
Amazing.
This
That's
is a
up
great
100%.
trading stock, isn't it? So at the moment it's consolidating. It's over my dollar level, so that's really nice. I just like to see a little bit more of a consolidation in this one, given how volatile it can be. But because Illumina can do all of its gains in 2 or 3 weeks, and then it's over for a while. But you've got to go back to when, not part of the decline, but when it got into this sort of trending mode again. Once it gets into this, it becomes very rhythmic again. So you see these nice rises, up, pull back, nice rise, pull back. And again, it's same sort of thing until it gets to the top. So we have to assume that given it hasn't done any of these consolidations much yet, that it's still got heaps to go.
And it's great that the actual watch list is picking that up.
I'd still be waiting for the pullback though, for the next one.
That's up 100% since October
Yeah.
last
It
year.
is.
So, I mean, that's a good
Isn't
return.
it?
Oh yeah,
Huge.
great movements. And I mean, you know, you mentioned just before about sideways consolidations. They're the killer of a short-term trader, or you know, someone looking to capture income. So you want to see this. You want to see movement. You want to see, you know, volatile action. And I mean, you know, Illumina's giving it to you.
So do you think it's going to pull back now?
I mean, it's already had a bit of a pullback, and it may or may not. But you know, depending on the strategy, I would still be bullish in the short term right now, because there are no real signs that it wants to, I guess, go lower. It might have a bit of a dip, but you know, look at that. Long-term momentum on the up, ride it up. And if you really want to get finicky with it, you can even go to the shorter time frames and just have another look at, you know, even these smaller runs. Look at that, 17%. Here's another example, 39%. So you get huge movement.
Wow. And all of these stocks meet those criteria right across on the watch list. So, okay, so what's the next one?
BGL,
Bellevue Gold, a gold stock. We're going to have a gold topic coming up soon, so make sure you keep your eye out for that one. Just looking at Bellevue Gold, very interesting in terms of the way that it moves. It's so volatile even on the monthly chart, which is interesting. 3 or 4 months and you make all of your money for a couple of years, and then it just does nothing for a while. So there was 329 to this high here, 422. So there's 1, 2, 3, 4, 5, 6, 7, 8 months. And it did it again here, not necessarily to the same degree, but you know, 100% there. We've got 133, all the way up to this recent high is another 200%. So it's still got possibly some more legs in that there, but at the moment it's consolidating, so there's no rush, but push through that high and it's more than likely on its way again. Yeah, I like it. It's a good one.
Gold's in an interesting space right now.
It's moving up now.
It just broke out of that sideways move
Well,
last week.
a lot of the big miners have to buy these smaller gold stocks to make their money moving forward. So, you know, they're not going to be wanting to pay top dollar for those, but if the smaller gold companies are making money, well, then they're the ones that you're better off to jump on, I think.
And I mean, how can you go against, you know, this stock? It's literally trading at all-time highs. It held above the previous all-time high. I had an opportunity back in December 2023 to, you know, typically when stocks break through to new all-time highs like it experienced through here, they can fall away, but it came back and held that high, broke through again, and now consolidating sideways. But I mean, even if we just zoom in to the shortest of time frames, you can see, even as a short-term trader, if I bring up my price percentage tool here, look at these moves, you know, just not even capturing the whole part of that move, 19% through there. And we're talking about...
So with the short-term trading, are you looking for 20% moves, or are you looking for more than that?
Oh, look, depending on the stock, but I mean, we are showing in these examples 19, 20 odd percent plus, you know, exactly as you've mentioned, and in not a long time at all. We're talking from February through to April. So, you know, strategies there you can have, and I know a lot of people talk about short-term trading as in, or trader type stocks as in you have to be day trading the market every day to get these returns, but that's not the case. You can trade good stocks on our market and hold them for a month and get good 20, 25% returns. Now that could be way more depending on where you place your stops and all that kind of stuff, which we won't get into, but I mean, great opportunities.
The next one?
All right, next one is BOE, which I know is one that you'll like.
Yeah, I love all these.
Okay, but this one's actually coming back, which is interesting. So it's fallen through that $4 level. It's having a bit of a consolidation at the moment. My question is, will it fall back into the range of this sideways closer to $3? And it really could, but look, you know, if you're trading this type of stock, I wouldn't be looking at it until it's actually given some sort of strong rule. This is catch a falling knife stuff right now, but at the moment, if we just have a look at how far it's come back, we can see from that high, it's actually down 40%. So often when stocks fall sort of 40, 50% from their highs, they'll turn around and make a run for the, you know, to go back up again. But yeah, just wait, I think, be patient with this one.
Yeah, you're gonna have to get used to this with these kinds of stocks. I mean, let's bring up the monthly chart. You can see it's not uncommon for this stock to be pulling back, because look how hard it's shot out. It shot out like a rocket, and you know, to me, all this stock is doing right now, if I can get my momentum line here, is that it's trying to find its way back to its natural gradient of slope of movement, if you will, or angle of movement, however you want to word it. But, you know, it's not uncommon for it, given the way it's shot out like a rocket, it's coming to pull back. It's moving back to that average gradient, which I actually quite like. As you've said, it needs to start turning from around these levels to give you more of that confidence. But what's really exciting is that it has broken through to new all-time highs. So, you know, the fact that it's done that, if it can hold above these levels and find price support here, that tells me that it wants to go higher in the longer term as well. So potentially a good long-term opportunity.
All right. Janine, next one.
All right, we've got JHX. So James Hardie is actually an incredible trending stock. You wouldn't actually think much about James Hardie, but it actually does trend really nicely. So not everybody's cup of tea given the history with this particular company, but for those of you who do have this on your watch list, what's interesting to see is that the percentage gains that it makes each time it has a run are enough to make some really good trades out of it. I'm just going to go back to this rise here. Just after the COVID correction, it had a bit of a consolidation. So I'd be quite, confident about it making something like 50 or 60% of rise when it gets going. But right now, we need to just wait and be patient, because we've got a trend line down here, which I think we've got one there anyway, but a momentum line, as Phil likes to call them. So look, we're still under that angle of that line, and it could continue to pull back a bit further because of that. So we just need to wait for some more confirmation there before thinking about it.
But I mean,
nice one though. Nice in terms of volatility. It ticks all those boxes, doesn't it?
And we haven't even spoken about traders trading on the way down.
The shorting side.
We're only talking about one direction.
One
is up
direction.
At the moment, not the way down, where you can make a lot of money doing that as
One
well.
Direction, not a band we're talking about here, are we?
Yes, correct, Janine. Phil and I are talking about making money, not bopping around. So I know you like to
One
dance.
Direction?
Just keep that a secret,
She
okay?
used to be dancing queen. Now
just
she's
between us, okay?
just between you. Have we got another stock?
We do, yes.
All right, so this is LOV. Oh, that's a nice one, isn't it? Levita Holdings, okay? So looking at the moves in this, another one again, what's coming across to me is that all of these stocks with this higher volatility, they tend to go up for 3 or 4 months and have these incredible gains. 100% rise there on that previous one. And look at the current one here to that high. It's almost exactly the same to that where it first got met resistance. And this is the first point of resistance here. So it may actually trade sideways for a little bit longer. But, if this repeats it, you just want to be the tiger, just sitting there waiting, being patient and wait for that best opportunity to occur again.
But I mean, it makes sense because, and that was the thing I wanted to point out. If you can see, or if you can recall, all of the stocks we've shown in the past, if we were to just zoom out on the monthly chart, they all look like this pretty much, apart from the second one that we showed. And that is because there is momentum, supporting this stock. And, you asked the question before, would you be buying it? Does it look toppy? So how about we go back in history, back to 2000 and, or whatever that is, 2021. You'd be thinking that might be toppy. And then stock gives you another opportunity. You might be thinking that's toppy. And it's continuously, running higher and higher because it is being supported by that volatility and momentum. So another one definitely to keep an eye out on.
Well, some great stocks you guys have brought up, and obviously some of them you should be having on your watch list now. Others you should be not putting them on your watch list, like the ones going down.
Yes.
But I love what you're talking about here, but there is a big difference between stocks that investors should be looking at and stocks that traders should be looking at. And we find a lot of the time on this show, we find investors giving us stocks that traders should be looking at and the opposite. So, but anyway, that is it for our topic for tonight. Now stay with us, as we've still got plenty of emails and stocks to go through. For those watching on YouTube and Facebook, you can watch all of tonight's show, plus the exclusive member-only content with more stock analysis on Talking Wealth. So grab your free 7-day trial. Now on talkingwealth.com, whilst you are there, you can also watch the weekly Australian Stock Market Report, where Phil and I share our views on the market, and we give you multiple stock tips that will pay for your yearly subscription to Talking Wealth. Now, if that's not enough, you'll also get hundreds of amazing interviews with global industry experts in the stock market, finance, gold, money management, mindset, well-being, fintech, artificial intelligence, business, and loads more. That's all on talkingwealth.com. Now let's get back into it. If you want to talk about a stock or ask a question, pick up your phone right now and give us a call on 03 9290 9988. That's 039290 9988, or you can text the number on your screen. Now, whilst we wait for your call, let's get into our next email. Now, Godfrey is holding Silex and he's asking, just want to get your opinion on Silex. I bought this stock in July 2022 at $2.10. I'm still holding it. It has been falling for several weeks now, and my dilemma is I find it hard to get out and take a profit because I invested so much time in researching and understanding the business of this company. Can you please see if it's still worth holding? Godfrey. Okay, Janine.
That's a challenge, isn't it? To fall in love with a stock and then, you know, to see it fall away like that can be a bit disheartening, Godfrey, but the main thing is that you've always got to know when you're going to exit, and that's really important. It's not about just, for this type of stock too, because of the volatility, if you look at the chart, it's not a buy and hold type stock you're dealing with here. This is a trading stock. So, you know, to be in one of these shares, it can be quite dangerous, but in saying that, it's actually broken through a really important level here historically for me, and I'm just watching and waiting, so I'm not surprised that it's pulling back. It's doing something that's quite normal, but I really want to be seeing it get back above that $6 mark in the next couple of months, and if it doesn't do that, you know, you really need to draw the line in the sand as to where you're going to exit. I think that's the most important thing.
No, I agree. Any thoughts, Phil?
Well, you can't feel too sorry for him. He's bought it at $2.10. The stock's up at $6, so it's an interesting. It's a nice.
But he's had to be patient, though.
A nice problem to have. But I mean, I know you're right. It's, you know, this is more of a trading stock. But you know, if you were to analyse it on a big picture perspective, it is making higher highs. It is breaking through to new highs. You know, in the process. So it is kind of in a long-term, I guess, bullish move right now, and like Janine said, it's just pulling back right now. If that continues on, obviously the thoughts will change, but for right now, it does look like just a pullback.
Well, to me, it's just this is a perfect example of what we're talking about traders and investors. Like, as traders, we don't care how much work we put into it. It's either we buy it or we sell it. If it's not getting where we want it to go or it's triggering a sell, we sell. It doesn't matter if we spend 100 hours on doing the trading strategy for it. It's about making money with us. That's our first and foremost. Make money, that's it. Whereas what he's fell in love with the stock that you mentioned, I'll fall in love with this stock because I did so much work on it. Not a good way to make your decisions. You know, you either decide whether you're an investor and you're going to hold it long term, 5 years, whatever that is, or you want to be able to capture more profit, your choice.
So what you're trying to say is congratulations, you've done a really good job.
Yeah.
At some point, celebrate that.
Celebrate it, yeah. Well, yeah, you just said it easier and better than I did anyway. So well done, Janine. Now we're going to look at Domino's for Gerard, who has bought the stock at $45.60 in March 2024. And since then, it's been going down. Now, yesterday I bought the equivalent amount of units I bought in March at $35.14 to average it to $40.57. I would like to have your analysis and what's your forecast. Also, your opinion on my move yesterday, Gerard. Phil?
Oh, Gerard.
Can I just say that, Gerard, we love you. You know, you're doing a great job out there picking some really good stocks, but maybe not necessarily in the timing of this one.
We had our show last week about dollar cost averaging, and you know,
and he just broke all the rules.
You've broken every rule out there. I know you're watching the show because you always email in. But look, let's go to the chart and have a look for you. But I mean, you know our thoughts on dollar cost averaging, Gerard. You know, you bought it once, it's fallen away, so you were wrong on your initial entry, fallen away, picking it up again, literally as the stock's falling. To me, there are no signs either on the weekly chart or the monthly chart that this stock is ready to reverse just yet. 1 week doesn't make a trend. So, I mean, you know, to me, if it can, firstly, I think where you've got your average, if it can get through $40, then I would say perhaps there is some potential that it is going to go higher. But the way this is unfolding, I'd be wanting to watch this on the monthly chart and look for confirmation here. And that, you know, to give you some perspective, that would be confirmation of some higher bases on the actual monthly chart, which will take a lot longer to confirm than you know what you're looking at right now.
Can I just say that having read quite a few of your emails, Gerard, I don't think you've got a huge ego, so I think that you're going to take this really well. The only thing that I would say is that I think you're going to change after. I think Domino's will probably change his view on things.
Well, hopefully.
Yeah, I'm hoping so too. However, the thing is, if Domino's did take off like a rocket,
It doesn't matter.
No, but see, in every situation, when you buy a stock, it doesn't matter whether you've stuffed up or not. If the stock goes up strongly, people then justify their
Yeah, but
decision.
You can't do that.
You can't
That's right.
celebrate a poor decision. Because, you know, when we're dealing with our students, you either trade well or you don't trade well. Doesn't matter how much money you made or what you've lost, as long as you followed your rules. But you don't validate a poor decision because it's actually turned out accidentally or it got major money.
Yep.
That's nothing to celebrate.
But it's the risk here that we're not considering at the start, isn't it? That's where the issue
the
is.
risk of buying, he bought it at the wrong time, but then he's compounded that by buying more of a stock he's already losing money on. That's a very poor decision.
And you might get one right, but you're going to get 9 wrong.
Correct.
And, you know, you can celebrate, you might be able to celebrate one off occasion, but it's going to cost you a lot more than it's
Well,
going
I'd
to
say,
false
I'd
sense
say
of
in this
security.
period of time in the market, he may get less wrong, but then once, you know, the next phase of the market comes, you just get so many wrong then.
We could stay here an hour chatting about this for Gerard, I can guarantee it, and probably give you a hell of a lot of great knowledge and wisdom from that, but we do need to move on. Now we have a caller on the line. Welcome to the Australian Stock Market Show. Who have I got on the line?
It's Gus.
Welcome to the show. Thanks for calling in. What's your question, Gus?
Hi, Dale, Janine and Phil. Thanks for the opportunity. I'm just asking about Aristocrat Leisure, ALL. I've had the stock for a long time, and part of me thinks maybe it's time to sell, but then part of me looks at stocks like Light and Wonder, and maybe Aristocrat can do something like that.
Are you a short, medium, long term for that trade, or?
I've had that long term.
Okay, so you're in profit now or you're in a loss?
Oh, yeah, pretty much in the green, yeah.
You're pretty much in the green. Okay, so fantastic. Phil's brought it up, so I'll get him to tackle that question for you, but thank you for calling into the show, Gus. Phil.
All right, yeah. I mean, flying at the moment. Let's go have a look at the chart. It's flying, the stock. It's breaking through to a new all-time high. I would hope that you're in profit, especially if you've held it for a long time. I can't see how you wouldn't be. And, you know, the way that it's breaking through this new all-time high to me is quite a bullish move at the moment. You know, obviously we have spoken extensively on this show about when stocks do break through to new all-time highs, they do have the potential to settle down, maybe pull back a little. But I mean, if this is a long-term proposition for you, then even a pullback itself isn't a cause for concern. I mean, you know, just one look at this stock, it is following a particular momentum. If I draw this momentum line through here or something like this, it is following that kind of momentum. And if you wanted to, you know, follow price even closer, if you're a bit more concerned about capturing more or locking in more of your profit, then I would say as long as it's holding above these momentum levels here, then I would think that the bias is definitely bullish and may it continue. But if it starts to break through those kind of momentums, then you're going to get those first signals that maybe it's a sign of the end. But I mean, it's very bullish.
So how would you advise Gus about where he would put his stop loss? What we think he should be doing?
I would think if it is a long-term proposition for you, Gus, I would stick to the longer-term time. If you are looking at charts, stick to the longer-term time frames. Don't get caught into the noise of the market trying any excuse to get out, because it might mean lost profit in the long run, definitely. And let the stock show you that it does want to turn around. Obviously, you are in profit, and I don't know his buy price, but he would be in quite a bit of profit. So you're in a nice situation. You've got room to let it play out and not be so quick to push that sell button.
Anything you want to add, Janine, before I go on?
Yeah, look, I just was looking at the monthly chart and how far it's moved away from that momentum line that Phil's got there. So just having a look at these rises, just to see where we are in the scheme of things for him. And coming up here, we've got, you know, like 120.74, and then after the COVID one, I'll just do it from the momentum line. But that sort of range, and if we look at where it came up from this line here again, we're at this sort of level. So I just think that Phil's right, that we've got some more opportunity here, but I don't, you know, it's not, I don't think it'll run on forever unabated as well. So don't sort of think, that's not what Phil's saying, but, you know, we've got 1, 2, 3, 4, 5, 6, 7. There's sort of, we've had 3 months up so far. There could be another 2 or 3 months up, you know, possibly to September, October or roundabouts, and then we might see a little peak out in price. But while it's running, like Phil says, you enjoy it. Yep.
Cool. Well, thanks, Gus, for your call. Now, Rabin is seeking our opinion on Zip. Now, Rabin says, unfortunately, I currently hold positions that have resulted in losses. I would like insights into its short to long-term prospects, including ideal entry and exit points. Could you please provide your analysis on the near-term catalyst driving its price, medium-term growth potential and long-term strategic outlook, Rabin? That's a lot. How do you do short and
Yeah.
long-term and do all of that? Like, whoa. I think we need a whole hour for this one, don't we?
We do.
I'll go to you, Janine. You
Yeah.
can shorten it for me.
Okay, Rabin, good stock choice. And I just want to go straight to the chart. I can't help myself here. Looking at this horizontal line across here, you can see that there's a great level there, and I'm really excited about where this thing's going. So well done. If you're
Oh, no,
looking
he's
to,
in losses.
yeah, but okay, look, is he going to buy more? That's the question. Like,
No,
you know,
well, I think he's already got a few positions because he sort of said
he's already
positions
got,
that are
I
in loss.
think that as long as he didn't buy at the top, this thing's probably going to take off. I could see it sort of heading somewhere between $3 and $4. Just looking at how it's unfolding now. So I'd be quite bullish on it. As far as what's driving it, I don't know. I'm just looking at the volume that's picked up as part of this recent run off the low, and to me that looks really nice, the fact that the volume's just gone up. So it got through my dollar mark, you know, and that can often increase the liquidity of stocks from terms of the funds that are looking at the stock and picking it up and pushing it higher, but I like it.
Yeah.
Look, I agree. I mean, you know, it really, if you have a look back around 2019, the stock really got going from around $1.80, which is where it is right now. You can see the bars, if we just zoom this out, the bar started to get a lot more volatile from around that $1.80, and we are approaching that right now. We're starting to see a really nice spike. I love the fact that it's cleared this high through here. It's in, I guess, clean or new price action since 2022. The only thing, will it repeat the previous price cycle? It might.
It might, but we don't know.
It might, but we don't know. It's still got quite a bit to go before you can say that. So, and again, depending, this was coming. I remember this during COVID. It was, you know, the darling stock. Everybody was buying it during
They were,
COVID. And maybe some of the fundamentals behind it do back it because, you know, credit cards or
Oh yeah, it's all
Afterpay
that
or some
whole
of that, yeah.
that whole space of,
You know,
yeah.
if the economy is going to struggle and people start using that kind of stuff more, maybe there is potential.
Well, I mean, you know, we don't look at that because we're technical analysts, and I mean, Rabin was asking about buy and sell rules, but in short, medium, short to long term, if it's going up, stay with it. That's pretty much what it is. And if it goes up long term, that's great. If it goes up short term, that's great. But just have an exit strategy. That's really what we talk about on this show. And if you don't have one, you need to start developing one. So maybe you might want to get my book, my first book. It's still for free on our website. Just pay the shipping. Now we've got a text from Paula who is asking thoughts on NXL. It had an amazing run in the last year, and I believe there is room to grow. Looking to buy as soon as it has a nice pullback. Thoughts, Paula? So, Janine, you want to have a look at that?
Yeah, this is actually trending really nicely, Paula. So perhaps you're a little bit of a cowgirl in this case because you're trading a stock that is volatile and, you know, it's got legs. It's going to take off again by the look of it. The only thing I'm a little bit concerned about here is that gap that's there on the chart, which it looks like it's tried to come back and fill, but sometimes that can slow these type of stocks down. But it looks like it's about to accelerate away in the short term. I'm just going to check historical peak that's just back here, which it's broken through, and that tells me that, you know, this ticks another box for me, the fact that it's gone through that level. It's trading at a round number. Sometimes these stocks can slow down around these whole dollar numbers, but you know, I'm liking it so far. I think it's in the early stages.
Yeah, really exciting. I mean, it's giving you that really clear or clean picture of a stock that's been, you know, falling away, then giving you that real nice base where it's consolidated and now breaking on through. I really like it. I don't know how much more I can say, but you know, it looks fantastic. It's running up, it's breaking highs, creating new
I just want to
lows.
see what, you know, like from here, so the close of last month, or that's weekly, let's just go back here. That's 22%, and you wouldn't think so. So that's sort of showing the sort of level of volatility we're talking about here, because quite often when we're trading stocks, we don't, you know, unless you're trading something that has that high level of volatility, you don't see that sort of percentage to the last trough there.
All right.
So it's a stop loss that'll be the
you
challenge.
both like it, yep.
Like it.
You both like it, just watch the downside risk, but well done on the stock pick. Now we have a text from Chris, who is asking us about our thoughts on CHN for a short to medium term trade. Has been making higher highs on the weekly chart and is looking good if it can clear $2. Well, okay, Mr. Phil, what do you reckon?
Yep, good selection on short to medium term trade. I would probably go a little bit more to the short side, but you know, it's coming out of a real significant fall, this stock. It's almost 90% that it's fallen down to these lows in February 2024. And if we bring up the weekly chart here, it is making higher lows, but you need to be careful because, you know, typically stocks, and I'll just refer you to a period here where the stock had been rising strongly and started making lower lows before breaking on higher. Now, this could potentially be a scenario on the opposite side, making higher highs, and because it's doing it quite uniformly, it could just be, you know, I guess, slight up consolidation move before it falls away. So you need to be concerned about that. And I guess one line in the sand there would be watch price under these levels here. If it breaks through these $1.19, $1.15 levels, I'd be thinking maybe leave it away, leave it to be. But if it does break through these highs, like you said, above $2 and starts to get a bit more expandy, I guess, in the bars that you're seeing, it starts to do it with conviction, then yes, short term, I do see a potential opportunity.
Perfect. Well, thanks for that, Phil. Now, remember to show your support for our channel and smash that like button right now. Now, if you are enjoying watching and you want to see loads more of our content, click subscribe now. Subscribing helps others find our channel so we can help them too. Now, before we let you go, what was your favourite part of the show? Was it Phil's hot stock tip, our topic for the night, or was it a viewer question? Let us know by commenting below this video. Now, thanks to all those who are watching on YouTube and on Facebook. If you're watching on talkingwealth.com, stay tuned for more exciting stock picks, insights and strategies. We'll be right back with that and more. Next week in our main topic, we get into the top 10 undervalued ASX stocks to buy now. Are banks or pharma the best stocks? Make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. Now, if you love our show, remember to hit that like button now and subscribe to our channel. This shows your support for the team that puts in the effort each week into bringing it to you. If you are subscribed, then you'll always know when we go live and put up new content. As always, thank you for joining us. For now, goodbye, good luck and good trading.